The banks are getting crushed here, and with negative rates, they don't lend out more money. They lend out less money. What if, Wouter, the ECB went the helicopter path and just passed out, notes to consumers that says, this money expires on such and such a date? I mean, anything close to that would have to spur inflation, wouldn't it?
Oh yes, very much so. That would be very inflationary and a very direct way of stimulating the underlying economy. But I think we're pretty far away from that, right? We're not in recession. We're still in positive territory when it comes to inflation. So that we think that route is pretty far away. But I do think that the negative TLTRO rate could be utilized at a later date, maybe 6 to 12 months from now, if needed. If they cut that rate, just let's say minus 1%, they're basically saying to banks, if you take this money from us and you lend it out, we'll charge you a minus 1% interest rate. So if banks lend out that money, even at a zero rate, they're still making a positive spread. That is something that they could utilize at a later date, we think.
How difficult is it at this point, though, given everything we're discussing in conversations we've had with other guests, for the ECB to actually outdove the market, not just September 12th, but beyond?
No, yeah, that's a very good point. It's very hard. And let's be very honest here. We're talking about monetary policy in the context where the cupboard is rather bare, right? We have to be very honest about that. The ECB is really pushing on a lot of strings and trying the best it can. What we really need is fiscal stimulus. That's what we really need in the Eurozone. And that's, of course, starting to percolate in Germany. It's starting to happen, but not yet decisively enough to make the difference. But that's sort of the situation we're in right now.